All right, today we're going to discuss how to journal your trades. Journaling your trades is the most important step that you need to take in becoming successful in your trading career. The first thing that you need to do is pick your preferred choice of pair and concentrate on it for a couple of months. Evaluate every few months and see where you need help and what's working. All right, so our preferred choice of pair is gold. The next thing that you need to do is to pick up your two time frames, a higher time frame that you're going to be using to evaluate if the market is trending bullish or bearish, and then a lower time frame that you can use to look for entries and confirmations. So the higher time frame can give you the setup, and then the lower time frame can give you the nice entry and can give you also the confirmation for the trade. You can still do this with a higher time frame as well if you don't know how to use multiple time frames. So right now we have gold on the 1 hour time frame, right? So when you come on your markets, right, you're looking to see if the trend is going higher or lower, right? So right now we can see price is going lower, corrected, which tells us that there's a potential that price might be going lower. All right, as you can see, you have your high, you have your low, right? Price has respected this low, right? So now we have a high over here. So we're saying price gave us an impulse, a correction for another impulse. All right. So now what you need to do is to write on your notes. What I'm seeing is price gave us an impulse and a correction, and I'm looking for the next impulse. So we are looking for bearish trades. All right, that's what you would need to note in your notes. So let's put our zones so that we can move on to the lower time frame. All right, so we have our high, right? And then we have our low, then we have our high, our minor high, our minor low. All right, so basically we have a range. So we could say market is in a mid-range. We have a bigger range. That means that bigger range is on higher time frame, probably on the daily time frame. And then you have a mid-range. The mid-range, that's the one that you're seeing on the 4-hour time frame, the 1 hour time frame, going on to the lower time frames. All right. So on your notes, you're looking for sell trades. All right. So what you're going to do is you're going to be watching the 30-minute time frame, or if you're skilled, the 15-minute time frame to see, okay, what I need right now is a good entry for a sell trade. So when is the next possible rejection that you could say, I need to see price hit this area for it to go lower? So for us, that would be our high right here. All right. So if price was to come and hit that low and hit this high, leave a wick for it to go lower, then that would be our signal. So what are you writing on your notes? On your notes, you're not then using the patterns that you will look for, the ones that you wrote on your trading plan. So those are the patterns that you want to see when price hits our resistance for it to go lower. So for example, we like to use engulfing candle. So if we were to see an engulfing candle around this area, we would probably enter with our target, the first target being 1915, and looking at our final target, which would be 19. Would have to get that target on the 1 hour time frame. What would be 1901? All right. So you have to remember that not any of this is going to happen as quickly as you'd want it to. So sometimes it's better to evaluate the markets on a Sunday. Write down your notes, write down what you're seeing, write down what you're expecting, the trades that you're looking for. Then on Monday, when markets open, when you're on the markets and you're in the session that you said you'd trade on your trading plan, you evaluate again, and then you compare your notes to see if they are in line. If your notes are in line, then perfect. you can't take the trade. If your notes are not in line, then you need to reevaluate and see, okay, do I need to wait for the markets to give me more information, or am I seeing something that's different, the new information that the markets gave me? Should I use the new information for the trading setups that I should be looking for? Because price could go higher instead of lower. All right. So once you have evaluated what you're looking for, right? When you finally have that trade, you need to write down the reason why you entered the trade, where you entered the trade, the stop loss that you have put, your targets. All right. Once you have those things down, right, you also need to write down if market does so and so, or if market moves to so and so, what will you do? So what we're saying is, if we see market have reached our resistance, right? Instead of it giving us a rejection as we were expecting, we see market drop a little bit and then it comes to go close above our resistance. All right. That means price has been invalidated. Our trade has been invalidated. All right. And if you had this in your notes, then you need to close your trade, or your stop loss would have closed it already for you, because on your notes you had written, if market does so and so, you will close your trade. All right. So instead of you sitting on the markets checking your trade all the time, if you have your stop loss and you take profit, sometimes I'll suggest checking the market maybe every 30 minutes or 1 hour. But every time that you check, you need to reevaluate your notes and see, is everything still in line? Did market do anything that I said? If it did, I would do this action. All right. Did markets go to my first take profit? Did I close my first take profit? Did my take profit close my first take profit? Did I move my stop loss to break even? All of those things should have been written down, and you should write those things down as you are checking up on your trade. That's what's called trade management. All of these things will help you at the end of the month when we evaluate all of your trades and see, okay, on this day, you did this and you followed up your notes, you followed the things that you had said, and look, you had a successful day. All right. And we can also see the days that you're not successful to see what you didn't do that you were supposed to do that caused you not to be successful. All right. So let's start there, and then we can work on what information we need to give you to be successful at generating your trades. Let's practice, and then we take the next step. All right. So let's practice writing our emotions down, our trades, what we're looking for in the market and what we're expecting, and if things don't go our way, what we should do. All right. And then let's track that down for the first week, the second week, and then we see how hard or what's impossible for you to follow your trading journal. Let's do that first. All right. Perfect.